Good morning, everybody. Happy Monday. It's DCA Live, and I got my two good friends here, CTO and, of course, Ivan on tech.
Hello. We're
Gentlemen,
back.
happy Monday. You guys both look
Great to be
alive.
here. Monday is the best day of the week. We have DCA.
You have coffee? He's got coffee. It's 4:30 in Sweden,
yes.
and he's drinking coffee. Good. When do you stop drinking coffee?
Me? I mean, in Sweden, we drink it in the evening, in the afternoon, in the morning. It's whenever you want, really. It's even at 9 p.m. I can take sometimes. But I'm switching more and more to decaf to balance it out.
Oh, I never understood decaf. It's like beer without alcohol. What's the point?
Anyway, exactly.
Yeah, and I remember in Italy after dinner, double espresso every single day. Switzerland, Italy, it's very common there. Okay, well, thank you both for joining. We're going to be talking about a lot of stuff. Like literally, sometimes I don't even check the Bitcoin price because it's probably at what 25,800, 26,000. Let me see. 25,895. So we are right back where we were back in June and July and August. It's very, very stable, which is good for everybody. But let's jump into the agenda. There's a lot of stuff to talk about, which is actually interesting. And this could be, many believe, September could be the last chance to kind of pack a bag. Before I jump into the agenda, what do you guys think about that theory? You know, Rektember is where things go down traditionally. And in fact, it's been quite stable so far in September. And then Uptober, things go up, especially in a pre-halving year. Do you guys look at that, believe that history?
You can start, Ivan, if you want.
Yeah. I mean, looking at historic returns is always negative, but at the same time, we have to remember it's just a few years. It's not like we have 100 years, like in the stock market. We have 10 or so years. So anything can happen, especially now that everyone is so set on September being bearish. I think Ran wrote on Twitter that everyone has already written 2023 off, that nothing is going to happen. We're already in 2024. We're thinking about the halving, and that's normally where the majority of investors get it wrong. Or at least within crypto, because most investors are not in crypto, but within crypto, we have written 2023 off. At least it feels like that when you look at social media. No one is really calling for big numbers in 2023. So who knows? I'm here with rosy glasses, hoping for a trend break, the break of the trend, that September will actually be green. Let's see.
Yeah, that could be possible. Sometimes as well, the dip happens early in September, and then it becomes green real fast towards the end. So that can happen too. And I know, CTO, you probably have a chart to show.
I do. And I was actually going to say the same thing as Ivan said first, that the moment everyone is bearish, there is actually some hope again, because the majority by definition has to be wrong for the big players to transfer money from the many to the few. But
So
actually the situation is very simple here. We're back in the same place we were in June. We're back in the same place we were in March. But since then, nothing has happened. We're just consolidating here. I have a very simple plan. That is, if we break out of this range on the downside, I expect we go quite a bit further down, 20K, maybe even further. If we break on the upside, I'd say the consolidation is over and up we go. So that's my clear action plan. I don't really need to predict it. I will simply react on the fact in which direction we break out now. That's the beginning and the end of my plan.
I like that. Very simple, clean and simple. But let's jump into the agenda. We're going to be talking about a lot of stuff today, and mixed things, good things, adoption things, etc. We'll talk about kind of Bitcoin and AI convergence, ETH, Ultrasound money, a stunning report from Fidelity, some DeFi shakeups that are causing some wrinkles across the DeFi world. Look at some altcoin action and how Tron is rising and doing very well. Some words from JP Morgan, who used to be the biggest Bitcoin hater on earth. Now they're extremely bullish, kind of like BlackRock. You see a pattern here with institutions, Fidelity, BlackRock, JP Morgan. It's all happening. Crazy adoption in one country that is taking a lot of people by surprise. Before we jump in, everybody, make sure you subscribe to the two channels below. The links are there for Ivan on Tech and CTO Larson. You will see it right below. So if you're not already, highly unlikely, but let's do it. So first topic in the box is Bitcoin and AI Convergence. Obviously, we know Bitcoin is a store of value. Cathie Woods believes, and she's been on fire so far this year. The last 2 years haven't been so good to her, but this year, you know, sometimes people are early. They are right, but they are early. But she does believe that not only is Bitcoin a superior store of value, but also it's scarce, durable, portable, etc. But she also argues AI could be a driver of adoption. She believes that AI will be a major driver of Bitcoin adoption, that it'll be used to automate many financial transactions, like using AI to, say, send money automatically and having a decentralized, permissionless platform by which to do that, which will make Bitcoin much more accessible to a range of people. And AI will also be used to develop new applications for Bitcoin, such as decentralized finance. We'll talk more about that today, and smart contracts. So is this hopium, or is there some logic behind this convergence between Bitcoin and AI? CTO, you first.
Yes, I have thought about this, and I think I have an overarching conclusion on this, because there is one trend that is bigger than AI, bigger than crypto, bigger than VR. You know, Apple is coming out with the first real VR headset probably within 12 months, and so on. And what is the bigger overarching trend? That is digitalization. That we start living a bigger and bigger and bigger part of our lives in the digital domain. We work digitally. We have leisure time digitally. We watch DCA live for fun. We live basically more and more digitally. And there is only one technology that the humankind has invented that can prove ownership in the digital domain, and that is blockchain technology. Of course, you can do it on a server, but you never really know. You know, maybe the server is modified. Someone has, tampered with it. It's not really proving ownership. There is only one technology that can prove ownership. That is blockchain technology. Bitcoin was the first implementation that actually worked to solve all the problems with blockchain technology. So it can't be faked by any single entity. And if we're now moving into this space, faster and faster, all these different tracks are accelerating. AI is accelerating. Crypto is getting more mature. VR is coming. Internet is better. Telecom, mobile data, 5G, everything is moving us faster and faster into this domain. Of course, that will benefit blockchain and all its implementations when we're kind of almost moving out of our physical world and moving into more and more in the digital world. Absolutely. And Excellent. Then this might take a very long time, but that is the boat we're on. That's where the boat is heading. It's a huge ship, and it can't be turned around, I think, at this point.
Ivan, do you concur, or do you see a different angle?
Yeah, I mean, there's this famous saying. I'm not sure whether this was said in regards to internet or blockchain, but no one knows if you're a fridge online, or no one knows if you're a fridge on the blockchain, basically, because even machines can have wallets. Machines can do whatever they want with money. We have direct access to the financial stack where anyone can create, transact, modify, come up with their own assets. And of course, the biggest thing with AI is that we unlock more productivity, but also creativity. And creativity needs to be open. The fact that whatever use case there is for money that AI will help us with, and that all of these different use cases are also global. That's another part that CTO touched on, digital and global. And the only thing that is global, available to anyone, whether you're a fridge on the blockchain that is connected with their wallet, or a car with self-driving cars, maybe paying each other to pass through, that all cars move aside. There are many different use cases that we've been speaking about over the years where AI and blockchain could be used together. To be fair, blockchain technology has been ready for this already for years and years and years. Now AI is catching up. So absolutely, in a few years, we may very well see, for example, self-driving cars paying each other to let some car through, where if you are not in a hurry, you can move over, earn some money. It's going to be very interesting. And there you need direct access to the financial stack. There is no way you can do that with JP Morgan API, PayPal API, Stripe API. You need direct access to the blockchain, to the financial stack. And that's crypto, 100%.
Hey, Ivan, I'll pull over for a Bitcoin.
Exactly. You can set your floor. Your floor. What's your minimum acceptance bit?
So one of the counter arguments and either of you take this. A lot of people believe that Bitcoin is still too slow and it'll drive AI nuts. Transactions this week took 20 minutes to get confirmations. But, think of it as the traditional financial system or credit card. To actually finalize a transaction takes 3 to 5 business days. So people won't mind waiting 20 minutes for that Bitcoin to come through for you to overtake me on the freeway, Ivan, will they? Do you think that speed is a real issue for AI, or it could chunk things up?
Well, I speak about blockchain in general. There was a good tweet I covered this morning that we have enough secure block space. It's enough. Whether it's Bitcoin, Solana, Cardano, no blocks are reversed. You can use any. We don't have enough consumer applications, but we have enough secure block space. With Bitcoin in particular, you can have instant Bitcoin transactions if you want. It's all about how long you want to wait for it. If someone, let's say, sends you a small transaction and you're okay with 0 confirmations, so you don't wait the whole hour, you can treat it as accepted. It's really up to you as the receiver of the money how long you wait. And Bitcoin Cash, as you may know, they're all about 0 conf, that you send and we don't wait that long, we because most blocks are not reversed anyway. So it's all about how much you're sending. But in general, yes, I speak about all block space, not Bitcoin necessarily. With all the tech we have right now, it's all interoperable anyway. With Thorchain, you can send money across ETH and Bitcoin. So what I love now that we haven't seen before is that it's all becoming one internet of value, with different protocols having their own niche use cases, all interoperable, working together. And soon we're going to have the tribalism mind switch from, my blockchain is the best, we're going to kill everyone, to let's work together. We actually have our own use cases here.
Yeah,
and
beautiful.
I think that the way that you would practically build, just like James said, the way you would practically build those applications is that you do it exactly like credit card. You don't settle every transaction every time, because that takes 3 days. While when you're sitting and shopping on internet, you think everything goes in like a few seconds, but actually it takes 3 days to settle. So you would do the same thing. You could have like a certain tolerance that you have the Bitcoin in your database basically, and you settle. So if Ivan wants to pay to overtake me here on the highway, he sends some Bitcoin, but maybe it's not actually moving, it's still in the database. But then that applications once every hour or once every day, it settles it on the blockchain.
Yep, good point.
Well, one thing also, guys, I don't know if you followed this drive chain debate, because there's now more and more debates how we can scale Bitcoin outside of Lightning. Before, if you mention anything that is not Lightning, you are a heretic. You're breaking the religion. You're not allowed to be in Bitcoin anymore. But now I see drive chain, some discussions. I haven't read too much yet, although I see the buzz building up with drive chains. So probably we're just gonna have rollups. We have the L2 token on ETH is rollups. We need something similar on Bitcoin, and it's already and it's scaled.
Definitely. It's all very, very technically feasible. Just needs to be plugged in. So speaking of another chain, actually, this was a little big piece of news. Let me blow it up so people can see. Fidelity came out and they made a whole research paper on Ethereum. And they used the term ultrasound money, which I think is a phrase that is coined from a website about EIP 1559 and ETH going deflationary. But what they did in great detail was spell out the case of comparing Ethereum as money to other sources of money, including Bitcoin and gold and cash, etc. And they looked at fee estimates and very conservative fee growth rates and the present value of fees in the future. And when I took this, first of all, their median price target today is about $2,090 per ETH. But when I calculated based on a PE of 30, same way you'd value a equity, that would bring us to a price of about $5,122 in the year 2030 based on a PE of 30. But remember, if the growth rate is like 20%, you can put a PE of 50 on that too, and you can extrapolate your price. What did you guys think of that Fidelity paper? And as I kicked this off with at the beginning, it's kind of incredible the way BlackRock, Fidelity's always been in Bitcoin and they've always been enamored with crypto. And then you got JP Morgan saying positive things too. Is this the year of the institutions, or at least the cycle of the institutions up to the halving? And what do you think of the Fidelity paper? Ivan, you first, please.
Yeah, so I see that they mainly calculate the fees, right? I don't know if they calculate also the staking rewards, which you get as well, and also all kinds of other things that you can earn if you have ETH, because you can bridge it to another layer 2 and put it in staking there, and in this way, probably you can calculate even higher. But to me, actually, now that you can calculate it in a way, it's a bit bearish because it anchors ETH price to reality. Now there is, like, ETH is not going to go to 100K probably with this kind of calculations. Before, when we just were new in this market, it was more imagination that would set the limit. Now when they're starting to calculate, I mean, it's both good because now we have institutions coming in, so probably it's going to gravitate towards that price target, but it's bad because it kind of caps our imagination. But yeah, I mean, I think this makes perfect sense. We just need to add other revenue generating protocols and see how much you as an ETH holder can earn. Let's say that you have staked ETH. If you have staked ETH right now, you can use, for example, Prisma, which is a new protocol, or there are a few of this, like liquid staked ETH. Anyway, you can take that staked ETH, then you can leverage it up, you can earn more yield. So it's definitely possible to get more passive income with limited downside, obviously never zero downside. And yeah, maybe we are somewhere there between 5 and 10K fair value. And then we add speculation on top and it goes higher.
Well, I love what you said about the anchoring the price, because it's so true. When you take traditional metrics to measure crypto, and I do a lot of that, a lot of it is completely insanely valued. But one of the things as well I would like to say is like pointing a telescope at a star from the Earth. If your angle is off by 1/100th of 1 degree, you're in a different universe. So if any of these metrics are wrong, for example, let me pop this up again. If their growth rate assumptions are wrong and the fees explode higher or lower, and then the perpetual growth rate is only 5%, any of these factors change, the calculus changes dramatically. And you can technically get to your 40,000 ETH, 50,000, 100,000, but I can hear the audience groaning, ETH only 5,000 by 2030. So there will be there will be some surprises out there. CTO, what do you think, sir?
I like Cathy Wood. Cathy Wood predictions are better when she said like Bitcoin is gonna go to 1 million. I don't know what she said about ETH. She has a way bigger imagination anyway.
Oh, her ETH target is like 200 grand, so it's big too.
Fantastic.
Yeah.
I was delighted to see this report. I mean, just the title, Ethereum Investment Thesis, and then Ethereum's potential as digital money and a yield-bearing asset. It's really great, especially these times when the SEC is kind of threatening that everything except Bitcoin is maybe security and so on and so forth. It's really good to see these institutions coming out and talking about it in this way. I think that was my first reaction. And then it's a very high quality and thoughtful report, really talking about all the different ways. And I also really like the discounted cash flow model and so on. But, and here's the but. Usually in global technology, these kind of models that are kind of based on today, and then we think it will go a little bit in one or the other direction, many times they don't turn out true. It goes way more extreme than anyone can dream up. And it's like you said, Cathy Wood was maybe the only one who really dreamed big enough when it came to Tesla. Everyone else thought it could go 10% up or 20% down. No, it's going to go 30x up, and so on. That I think is true here also. I think the eventual outcome can be drastically different. It can be much bigger than anyone can imagine, and these models are just not correct. Or it can be replaced by something else.
Exactly.
Maybe, Tron wins over Ethereum in the end, or something, and this all goes to zero. I think those more extreme outcomes are maybe more likely than some sort of middle way outcome. But I think it's really good that we're getting these kind of models, especially if they are modified a little bit, and they put a target of 30K or something like that, because this is really the world of the self-fulfilling prophecies. Here is there's no actual revenue and accounting system coming out and so on and so forth. So, I mean, the sky's the limit. If people think it's going to go to 40K, it might go to 40K, because then no one wants to sell and everyone wants to buy. And then price goes up. So I think that's a really the opportunity here. If they look down a specific target, that might happen in that.
Good. So we're going to switch to the next story, and this is kind of DeFi related. And I know you guys are deep in this. This is the MakerDAO proposes Solana blockchain. MakerDAO co-founder, code base for new chain, diverging from Ethereum affiliation. Immediately afterwards, Vitalik sold his Maker bag, which was worth $750,000, if I'm not mistaken. And there's maybe some infighting behind the scenes. But Maker is actually a very, very important token. It is truly, as many believe, the only truly decentralized stablecoin, DAI. And it's used in a lot of DeFi projects. So the question is, how good or bad is this? There's also legal ramifications behind what's happening with DAI and law cases and legal liability. It's a very, very complex DeFi world. But I'd like to go to you, Ivan, first, because I know you spoke about this actually this morning on your video. What do you think of all of these changes in the DeFi world? Does this mean that stablecoins cannot be truly decentralized as we go forward? Because this is one of the reasons why this has been so successful, is its decentralized nature and the underpinning for many DeFi projects. But I'd like to hear your thoughts on everything from the founder to Vitalik's response to legal liability to decentralization to A16Z dumping as well. Where do you see all this going?
Yeah, and there are many topics here, like you mentioned, James. So there are two big ones. So one topic is that the MakerDAO wants to do an app chain. And this is in line with our app chain thesis we've been discussing here on the channel for a few weeks, that soon many DeFi protocols will want their own chain, because we have the tech in place, we have the liquidity bridging, we have the bridges to bridge assets, like everything is in place to do your own chain, and you can share security with ETH or Solana via rollups if you want. So the tech is in place. And we are looking forward to this app chain world, which now seems to be becoming a reality. What's interesting is that most app chains within the ETH ecosystem, they pick EVM or they pick OP stack or something similar, which is EVM based at the end of the day. And Maker, they said, actually, we want to pick Solana. It's an Ethereum based project, but they said we want to pick Solana as the code base. So for me, this is very bullish in terms of Solana, because Solana, if this becomes a reality, Solana may get into a trend where now many projects copy Solana and do their own Solana chain. Just like we have ETH, Polygon, Binance Chain, it's all copies of ETH with small tweaks. But this is a very good, it's a very good momentum for the dev community, because all devs build their chains using the same stack, the same tools. They all help each other to build out tools. More devs see the value in learning Solana tech stack, because there are many different applications and chains. So that's very positive for Solana. In terms of stablecoin and whether DAI is centralized or decentralized, it has been quite centralized for the past maybe 3 years, ever since the C19 dump, which was 2020, where it almost broke down. Because before that, before the C19 dump, or when it dumped like crazy, and you know that DAI stablecoin is backed by ETH. So this means that all of these stablecoins, which were issued by the DAI protocol, they're backed by ETH, and now ETH dumps a lot. So the collateral dumps a lot. And it was very close that a lot of these DAIs didn't have full backing, because ETH was the backing in the dump lot in price. So they have had the USDC as part of their collateral for quite some time. And that's why personally, I sold all my DAI in May. When was it the stablecoins dumped? I think it was May when USDC started to depeg, because DAI depegged in the same way. So for me, this hasn't really been an attractive stablecoin since then. That's why since then I'm all in real cryptos, Bitcoin, ETH, Solana, real cryptos, and no stablecoins. And now we had this document leaked as well, which I covered this morning, how they communicated with the court, where they said, dear court, we are a decentralized organization. You cannot send this court order to us. No one will reply. But then they were still forced to comply. And then they said, by the way, guys, we were hacked. Our previous emails, it was a hack. We didn't actually send them. Someone hacked our email server. So I thought that was quite funny. And to me, it's more of it's another red flag to be a bit careful with this. Even synthetic stablecoins, which should in theory be decentralized, but they're not. They're still still some guys there running it and writing code. And we see for the first time now that the legal world is meeting the DAO decentralized world, where all of our theories about ourselves that, we're decentralized, no one can go after a decentralized organization, now it's really being tested because they are trying to go after MakerDAO. And they actually did go after them and told them to pay $18 million in damages to someone who sued them for patent infringement, something like that. So this is quite interesting. And then also in that lawsuit, they were discussing that we cannot really reply to this lawsuit as MakerDAO, because if we do, whoever replies will be the official, partner in the organization, and now they're potentially liable for tax because they become the person that is employed by MakerDAO or managing MakerDAO, and then they enter this whole discussion about what is the tax liability if you have an unregistered entity which is on chain, it's worldwide, it has millions in revenue. And so could the government see it as some kind of partnership, unregistered LLC? Because they could see it as that and say, we think this is, it's unregistered LLC, and all this profit that you guys have, you get a tax for it. And we know that this guy is signing there something. He's part of the multisig. And that's the only person we know, so let's go after him. There are many questions, and we don't know the answers. This is all going to be resolved in the coming years as the traditional world meets the DeFi world, and all of our theories about ourselves will have to be tested in court. So yeah, that's a short summary about the Solana move, the scaling, app chain, and this whole legal thing. It's actually two different news, but it was in the same kind of news cycle that we had today around Solana, around Maker.
Awesome. CTO, what's your point of view on all of this and the impact?
Yes, I have thought about this, and I have a clear opinion. DAOs are not going to work. DAOs are not going to work. And the argument is that a smart contract is, I've made this argument also. I realized it's not going to work. Smart contracts are autonomous. That's the argument. You put it on the blockchain and then they operate by themselves. And no one is responsible. Well, a vending machine, that's the argument they're going to take in court. A vending machine is also autonomous. A vending machine operates by itself. The vending machine makes profit. The smart contract makes profit in fees or whatever. It's exactly the same. But you think that they will let no one pay taxes on those profits because you're a DAO and you're like, what did you say, Ivan? Intergalactic entity outside any worldly jurisdiction or something like that.
Decentralized in name only. Yeah.
It's the same thing as those guys putting out the vending machine. They still put it out there and it's generating profits. It's the guys who put it out there. They still need to pay the tax. This isn't even about the SEC. Even if Gary Gensler wakes up tomorrow and he has like 180 degrees change of mood, he gives blanket okay to everyone, no problem. SEC is not going to come after anyone. It still doesn't help because it's the tax. Who is paying the tax? A bunch of Americans or Europeans living in the West, operating as an entity and making like $1 billion in profits and not paying tax? No way. No way. It's exactly like they had put out vending machines. They need to form a legal entity somewhere, comply with accounting, report tax, comply with regulation. And of course, that could be somewhere in Dubai or Singapore or something then where it's favorable. But doing it in an intergalactic parallel space and thinking that's not going to work, that's not going to work. And I think this is different from checking in code on GitHub while not actually having any control of the entity as such. That is fine. Writing the code is different from having the keys and signing rights and operating the entity. It would be like, say you publish blog posts with drawings how to build better vending machines. That doesn't get the Coca-Cola bottle stuck, so you have to, juggle the machine. Maybe you solve that problem. You publish a blog post. Here is how to build better vending machines. That doesn't get you liable for any tax, even if someone take that blog post and go and build a vending machine and deploy it in the subway station. That doesn't get you liable for anything. So writing the code is different, but operating the DAO isn't going to work. They're going to hold those individuals liable for the tax made by the DAO because it's like an association. Now, I'm not a lawyer, but I think actually thinking about it, this is kind of common sense, and I'm just trying to apply common sense here. I think that's how it's going to go.
And as I've always said to people who are investors, never invest in a DAO. No value will ever accrue to you. So be careful out there. Okay, let's switch gears. Let's talk about this one for a second. This is kind of the altcoins over the last month versus Bitcoin. Bitcoin is that black little vertical, and you can see that Bitcoin has been crushing pretty much everything. But there is a little bit of green, and that is Tron. So Tron obviously is heavily used by folks in Asia for gambling. Massive adoption on that chain, relatively simple chain. But if you look at the rest of the names, in fact, as Uniswap on the right, all the way down to the right, as far as I can see. So a lot of interesting changes here. What is interesting is like Uniswap getting hit so hard. I'm not sure of the exact reason. I don't follow it very closely, but I do know decentralized exchanges are doing as much or more volume than Coinbase right now and other players. And I think CZ came out and said that he expects DEXs to do a lot better than CeFi in the future. And he runs a big CeFi SEX, centralized exchange play, not the CEX play. So CTO, I'm going to kick this one to you first. What do you see happening with the altcoin market versus Bitcoin, and any particular favorites on this list of the top 50 that you're looking at right now? And do you expect, we know that alts run faster upwards and they fall faster downwards. It's just the nature of the beast. That's why we play them.
If we start with the market as a whole, if I can share the screen. So nothing has changed since basically November 2022. Bitcoin dominance, I don't think it has changed. I think the direction of the Bitcoin dominance is still up, even though we had a rejection, but it's kind of not really conclusive. And if we look at the Bitcoin dominance, excluding the stablecoin, so only the speculative Bitcoin versus speculative altcoins, it seems even clearer that I don't think the trend has changed yet. So it's really headwind for altcoins. That's what we saw on your chart also, James, that almost all the altcoins are actually down. And I that makes it's few winners in this market. Definitely. And then what about Tron? I don't really have an opinion. I mean, they do have a big community, and I think a lot of people rule projects like that out. They have big funding, they have big community, and I'm not so sure that we should rule them out yet. Everyone said the same about BNB basically, that a couple of years ago, and they've done pretty well. And I mean, the Tron chart doesn't look too bad looking at the few years perspective. Most of the altcoins have done much worse than this.
Exactly. Cool.
But I don't own any Tron. I don't really follow the project, but projects with community and big backing, don't laugh too hard,
And adoption is a key factor that we always need to look at as well as we go forward. Okay, let's talk about, I've been asked to blow up the screen and add myself as a fourth chart. We're going to switch gears and talk about JP Morgan right now. And this will be me, so we're not going to be four. So JP Morgan said just over the weekend, the SEC will be forced to approve the spot Bitcoin ETF. And I know we've been kicking this around for a long time. But again, I cannot find one person that is on the side of the SEC right now. Gary Gensler is probably one of the most hated people on this planet. And it's a big list. It's a competitive list. But for JP Morgan to come in and say exactly that, the SEC will approve it. A lot of people are talking it's going to be approved first. There's a lot of chatter on the internet like October 16 is the new day. I still stick to the thesis of it's going to happen in Q1 2024 before the halving. It has to happen before the halving, or else TradFi will freak out and say, we can't miss the party. And they'll be knocking on doors of the SEC to make this happen. Ivan, I see you smiling. What is your take on this?
Yeah, I think that Gary, he is just kicking the can down the road. He knows that it's inevitable. It's a bit too embarrassing to allow it right now because he just said that we're hucksters and fraudsters a month ago, and it will be a bit better for his image if it is next year, because then people have kind of forgotten that he said that we're all scammers. So yeah, I think that fundamentally we are already approved. In my mind, we are already approved. Now we're just waiting for Gary to cut the BS and then finally do it formally. But fundamentally, it is approved already. Now we just wait. And in January, that's when the deadline is for Cathy Wood application. So it's 21 shares and ARC. And that's the one that I think is going to get approved first, because if that one is not approved and then BlackRock is approved, it's going to be weird, because those applications are identical when it comes to how it's structured, and both are using Coinbase for surveillance and things like that. So yeah, it's and that is the first big deadline in January. Not sure about the date exactly, maybe you guys know, but ARK, Invest, and 21 shares, they together have this ETF that is pending.
Yeah, good. CTO? Spot ETF happening Q1 or before Christmas?
I would love to wake up tomorrow and see ETF approved and Bitcoin at 50,000 and so on. But I don't know. Maybe it's just my engineer mentality. I hope for it, but I don't believe it this year. I think too much skin in the game, sort of, for SEC. Gary Gensler has held the line so hard that there's so much manipulation. And I mean, honestly, is there manipulation in the crypto market space? Yeah, I would, say true that it is manipulation, even on Bitcoin. We can see it sometimes in the chart, right?
It doesn't matter, because they have approved futures, and that's what the judge said in the Grayscale case, where this is capricious. That's where they said it's capricious, it's random. But you approved future, but not this one. It's the same asset. So whether it's manipulation or not, I don't think matters anymore. Maybe it would matter if they didn't approve the futures one. And but one question I have to you guys: what do you think will happen? Let's say that the ETF is approved tomorrow. Do you think Bitcoin would pump tomorrow, or is it more likely that it will dump us? It's news is here. We don't have any more big news, and then it will take maybe a few months before the price really ramps up and we see the effect of the ETF.
Initially, the first day it would pump for sure. That kind of news, it would pump that day. But then the bigger question is, are institutions really waiting for the ETF to invest? Couldn't they find a way to invest already? If they have $1 billion to spare and they want to put it in Bitcoin, can they really now not figure out a way to do that, to create Bitcoin price exposure already? What do you guys think?
Well, the whole approving futures and short futures and leverage futures for Bitcoin is...
And short as well.
It's so ridiculous. If the underlying asset is something that is a corrupt and a scam, how the hell can you do a leverage future on it, or a future or shorter? It's just ridiculous. And it's very clear that the government, at least the Biden administration, saw Bitcoin as a threat. In fact, former President Trump saw Bitcoin as a threat as well. So Bitcoin is not liked by governments. It does undermine the control of governments, and that's why CBDCs will be great for controlling people as we go forward. And that's the end game, and they're coming over the next 3 to 5 years. No ifs, ands, or buts. And also what's happening is, people need a hard asset. People are now waking up to debasement and money printing. If you talk to somebody 10 years ago, what's money printing, what's debasement, they wouldn't have a clue. 5 years ago, even, they wouldn't have a clue. Today, they have a very big clue. We lost CTO. His lights went out. But I think it's only a matter of time before they have to do the right thing and approve it. There is a small talk of the only way that Gary Gensler can save face is to revoke the futures ETFs. But that's impossible. Once you let the cat out of the bag, you can't get it back in. So, CTO, yes. Did we lose you?
I'm still here. You can still hear me, right?
Yes. There you are. Back again.
So just click the wrong button. But I have another input to this. because, as you say, you touched on something important, that Biden administration generally have felt the threat by crypto, that it could realistically become so big that it starts threatening the control of the US dollar-based financial system. That has been their legitimate concern, and yeah, that could happen. Technology has proven many times that it can become so big that it becomes a huge powerhouse, and they can influence everything, like, I don't know, Facebook influencing elections or whatever. It can become that big. And then they've thought, okay, in their best intention, probably, how do we reel in control to govern what is the best for the nation, the best for the people, the best for, in their mind, what they feel is the best. But perhaps next year priorities are changing, because what is happening in November 2024, elections. And there is only one thing that politicians generally, I have no in particular insight in US politicians, but in general, there is one thing they care even more about than doing the best for the people, and that is winning the next election. And is it really smart? Are they going to win any votes by trying to kill some Bitcoin ETF? Most people who are not in crypto, they don't care. They will not win any votes on that. But the people who are interested in crypto, they will win votes if they are a little bit more leeway here. And I guess we'll talk about Turkey later. But I've seen the research in the US. There's a lot of people who are interested in crypto.
Yeah.
And a lot of people who are influenced, are quite influential. I saw it was that was during the bull market, but it was like 62% of the high-income millennials that owned crypto, and that's the people who are very influential in society and getting more and more influential. So, maybe they will change priorities. Now we need to win an election. Then we shouldn't alienate this quite influential group by doing this thing that the other group actually doesn't care about, that are not in crypto.
Exactly. 20% of Americans hold crypto. So, denying crypto means you eliminate 20% of the voting population. And as you say, some of those voters are very influential as well. So it's like politics is very difficult, but when you add up kind of what people like to vote on and you do the math, it's pretty easy to figure out. So any political strategist worth their salt will make sure if anybody's running for office, they'll say, do not be against crypto because that's killing yourself. Like Elizabeth Warren is already toast. She's corrupt as can be. She has her hardcore, septuagenarians who follow her, but after that, there's no shot as we go
exactly.
forward.
Shouldn't that happen, right? They have like thousands of people trying to help them probably how to win the election, and someone is going to go out and do this research, and they're going to come back with that conclusion that it's smarter to be, a little bit more positive here.
Yeah, in fact, that brings us to our next story. And, you can see, I did this analysis early 2022. I looked at the correlation between crypto adoption and either authoritarian governments or inflation. So if you have either an authoritarian government or high inflation, you adopt crypto. It's where you go. It is your life raft, your safety boat. But this is an interesting one here. Crypto adoption in Turkey has risen from 40% of the population to 52% of the population over the last 18 months, driven by concerns about high inflation and the Turkish lira's depreciation. Everybody is scrambling to get some of this Bitcoin crypto stuff in whatever form it is. It's like people in Argentina. They no longer want to get paid in pesos. They want to get paid in stable coins so they can flip that into Bitcoin. That's the whole demand. So there's a whole cottage industry now in Argentina so people can get paid in stable coins. Now, KuCoin, I think, collected the survey. We don't know if it's 52%, 49%, but it's definitely grown a lot since they did the survey last time. And I think Bitcoin is the most popular asset. 71% own it. 71% of that 52%. And it's all people talk about. A lot of the community in Turkey, they talk at coffee shops, they share ideas, they're very social, and that's the buzz. That's all they talk about. So my point of this is we know things are becoming more dystopian as we go forward. We know deficits are exploding. We know more money printing is coming, yada, yada. Every fiat currency will become Turkey, and therefore, by default, adoption is going to go through the roof. What do you guys think?
Oh, it was an amazing report. Anyway, guys, if you haven't read it, you should really read it, because it's really what could happen on a bigger scale. We'll talk about the inflation, but there were so many nuggets of important information here. Half the investors are female, between 18 and 30, 47%. 31% made their first crypto investment in the last 3 months. You know, while the West is like this, it's a ghost town. There is no one here. Almost everyone has left. 31% made it the last 3 months, and 54% under age 30 joined the market last year. And personal connection played a big role. According to 57% of participants became familiar with crypto through their family or friends. So this is really like a grassroots movement that has spread to half the population, which is incredible. Equal men and women, people joining now, and seeing it as a big part of their future. And if I can share the screen, of course, it's understand what is the trigger.
Pull it up, Bitcoin Turkish lira chart too. Interesting one.
Exactly. So this is here. I don't know if the text is too small, but this is in the 90s. The exchange rate from Turkish lira to the US dollar was basically, it was over 200. It was 369, and then it was like 1. And then if we zoom in here, the past couple of years, it has gone from 0.12 in 2021. And then like just in a couple of months, in May here, it was 0.05. Now it's like 0.036 a couple of months later. So of course you understand that there is a pressing need, because the fiat currency is not working for people. So I just wanted to share that. But then what happens? That's a triggering point, but then it's spreading and everyone's getting interested, and basically half the population is suddenly interested in crypto and exploring Bitcoin and the stable coin and Ethereum and speculation and trading and everything. And who knows, maybe this catastrophic event of the fiat currency will now position Turkey in a way that maybe they will leapfrog. If really Bitcoin and crypto takes off, Turkey will be ahead of the rich countries like Germany and Sweden and France and Norway or whatever, where we're so comfortable, we feel we don't need to do anything. We can sit comfortably and enjoy the fruits of past successes 100 years ago, while Turkey is perhaps now leapfrogging. And I think it's absolutely fantastic. I think it's fantastic news.
Yeah, I don't know which culture it is or which language. Sometimes I get confused, but necessity drives adoption. So it becomes no longer about, oh, I'd like to have a little bit of Bitcoin to save myself. But if you look at what happened in a place like Lebanon, when the banks shut down, not only do they have hyperinflation, but people can't even get access to their crap fiat. They're just locked out of the system. It becomes a necessity. We saw the same thing happen in Afghanistan for women trying to find a way to flee and get out. The only option was Bitcoin. And it's just going to trickle up the food chain slowly as it becomes more and more necessary to have some. Ivan, what say you on this topic about adoption?
A lot, guys. Number one is rate of growth. Like Sito mentioned, it's word of mouth, which means exponential, because everyone brings a friend, then the friend brings 2 friends, then everyone brings 3 new friends each, and suddenly it's 100%. So from 50 to 100 is actually a smaller step than from 1 to 3%. So hopefully within a few years, it is going to be everyone. And also, I was born in Belarus. I can really see the use case here firsthand, because before Bitcoin, what you did is that you try to get dollar. And where do you get dollar? You get it in an ATM, which is limited supply. So you stand in line. It becomes massive lines. We had the same thing in Belarus. But then they had, because the inflation was so high, they had to remove a few zeros from the currency. It was like in trillions. It was too big. So they had to remove zeros. So what happened is that people try to get out dollars from ATMs. Q becomes big. and you have to go to another ATM, find the one that has dollars, and then none of them have. And then what happens? You have dollars, you cannot really move with them. You want to go to another country, it's impossible. And right now, when everything is becoming more digital, it's even less practical to get dollars, because if you get some dollars in your bank account, okay, now it's capital controls. So you may be even forced to convert it back at any point into your national fiat. So that's why crypto is the solution. Everyone wants to escape the fiat system into the free monetary world, which is crypto. And more and more people realize the freedom, how nice it is to have your own wallet, where you have self-custody, you have full control of your money, you do whatever you want with it, no capital control, the government can never touch it, and you are part of the global financial system. You're not alone in Turkey, where you are the only person that has this lira that goes to zero. No, now you have crypto. Now you have ETH. Now you're part of the global financial community, and that's such a freedom. It's really a massive relief if you're in such a situation. And I've been wondering, how long time will it take for these people to get it? Because in Argentina, we've seen the same, a big adoption in Argentina, but over the years, I've also seen reports that USD is still the biggest inflation protection for them. And I wondered, when will it end? Because Bitcoin is better, crypto is better, stablecoins are better. And it's taken years, because I remember in 2019 reading this, that yes, crypto adoption is going up in Argentina, but still people prefer USD. Now, finally, we see very big numbers in countries like Turkey. Argentina probably is a similar amount. I haven't seen any report, but that's the one I have been hearing even more about, that crypto is on the rise. And yeah, this is exponential growth. We cannot forget that. Exponential growth, meaning that very soon it's going to be 100.
Awesome. Well said. So we have about 7 minutes left. You guys open to a few quick questions before we run?
Absolutely.
All right. Let me see if I have my Q&A slide. I'm looking at so many different screens open here. There it is. Pop it up. Q&A time. So first of all, thank you to everybody for being here. Thank you to the mods in the chat. Thank you to CTO and Ivan for joining. Every week we do this. Next week, I think we're on Ivan's channel, correct? Or
CTO's
channel. CTO's channel.
Have
Okay.
we been at
Maybe
CTO?
my turn next week. Yeah, my channel next week. Yeah.
Okay. And Mondays are CTO's favorite day. So first of all, from Freedom, Freedom says you guys do a great job. Very grateful. Next is Degenerate Speculator. Can you guys look at Cardano for a second? I think everybody knows my opinion on Cardano. I'm very big on things like adoption and other metrics. How do you guys feel about Cardano? Ivan, over to you first.
Yeah, I mean, Cardano, they are getting more adoption, more smart contracts. I mean, they're getting there. They have some projects that have quite good performance. One of them is Iagon. If you watch the chart, it actually has recovered. It was down like minus 90%. It was like all the altcoins, fully dead. But it pumped back to minus 60% from all-time high, which is quite good. I mean, for an altcoin in this environment that was down minus 90, now it's minus 60. And Iagon is kind of like render, or it's storage, and I'm not too sure. It's something with storage, kind of like Filecoin, maybe you can say. So it's good that the best thing a chain can have is that people are building and things are pumping. Things have to pump. People need to make money, so they have a reason to download the wallet and mess around with the chain. And yeah, if they can have more, it's only good. But I'm still missing this explosive growth of projects, and everyone is launching, everyone is having fun. It's still missing a bit. But is it better than a year ago? Absolutely. I think they have done a lot since the past.
It has half the number of daily active users than a year ago, though. Can you explain that?
Yeah, I don't know how you measure that. Probably in terms of number of addresses or something like that. But also how much of that was wash trading. In terms of number of users on blockchains, it's actually very difficult, because one address can be many users if it's an exchange. I think you said on Twitter today somewhere I read, and vice versa, because one person can have like 1,000 addresses. But in terms of, for me, it's all about, are there projects that do well and build? I look at that more than active addresses, because that's impossible to really verify. But people building and doing interesting things, that's more verifiable. Yeah.
I can bring up the chart. I think it's pretty clear, actually. So I understand there are a lot of questions about ADA, both the personality, Hoskinson, and the price movements. I mean, people have made fortunes here, like the pump from March 2020 up to August 2021. That's 13,000%. So we're talking more than 100x move up. There was like an inverse head and shoulder here, a very confident entry for many people, trend up. Many people did leverage here and they have huge success with ADA. But then the mistake that many people do is that they hold it all the way back again and they give all the money back. And then they want basically that we come here and pump it somehow. But the trend remains down. The trend has been down all the way since mid 2021, basically 2 years ago now. The only hope I can give is that if price turns here, this actually forms a channel. You see here that it touched once, it touched twice, it touched 3 times. So if price turns up here, this forms a rectangle, a range, and if that breaks on the upside, that is actually a bottom pattern. So what you would like to see, probably if you're an ADA fan, is that this line holds, and we break that rectangle up on the upside here at 0.5 or something like that. If that happens, you have a confirmed bottom pattern according to classical charting, and the trend probably would turn back up there. So will that happen or not? I have no idea, but you can react to that market event if you want.
Excellent. So a question from Zizat. CTO James and Ivan, when did you guys get your first Bitcoin? One.
I FOMO'd in, guys, in 2013. Right at the peak. And then it went from 1,300 to 200. It was the first, but that was the best thing that ever happened to me, because you learn about the cycles, you learn about how it works, that it actually does come back, and that in the darkest hour, it is the dumpiest before the pumpiest, like we say on our channel, that it is right before the dawn where you have it the darkest. And things repeat almost exactly, because when I got in, what happened was that Mt. Gox collapsed. It was right during that time. And now we have FTX collapse. And the same kind of cycle is repeating now as before, that people are super scared and then they regain confidence and they enter into the market. So that's really what gives you confidence. You've been in a few of the cycles, you become numb to it. That's why people sometimes don't understand, how can we still be here? Everything is down minus 80, minus 90%. We've been a few times here in exactly the same situation, and that's why. So yeah, it's been crazy times.
For me, it was really late. I actually had blockchain as a technology while I still worked at Ericsson. I had blockchain on slides that I did because I understood the technology. I realized, oh, this is great. This has so many applications. You can secure charging data so no one becomes immutable, no one can modify it. And I explained the technology to customers with my own slides, but I didn't translate that into that I should go and buy my Bitcoin. I didn't see myself as an investor. This was like 2014 or something like that. I felt I'm an engineer, manager, something like that. I don't see myself as an investor. So I didn't go and buy any Bitcoin. It was only after I had kind of left and had my own time to really research and study. It was in spring in 2017 and I suddenly understood. And then I became super stressed. I felt I need to buy it like today. And I tried to make some bank transfer and it took like until tomorrow and I was super stressed. I felt I cannot wait one more day. I have to buy it immediately. And then so I got to take part in a lot of the bull run that happened there in 2017. But I also got a crash course in altcoins, because if you remember, during the run there was like 6 months of where altcoins kept losing against Bitcoin and many kept losing against USD. And in many cases, I was too early. I saw some potential in, say, Link or something like that. Then nothing happened for 6 months. And I thought that, okay, maybe I'm new in this industry. I just don't get it. I don't get the potential. And then I sold most of it, and then they go like 1000x after that, and so then this was really a crash course for how crazy this market is, and it was my learning university for realizing that you need some methodology and process and tools and all that. That was in 2017.
Yep. And for me, I'm very, very conservative and very picky about what I invest in, and I need to understand it cold. So I started nibbling in 2017, and thank God it was only a nibble, because I was still trying to understand how it all worked. And then I started putting together this model in 2017 that I believed that based on scarcity, that was kind of my thesis, that Bitcoin could reach 100,000 by the year 2030. And when I told people this at the time, they thought I was completely crazy, absolutely insane. As it turns out, that ended up being very conservative. But then nibbled a lot. Then when I saw things happening later, 2018, 2019, especially 2020, 2020 was the turning point for me. In fact, 2019, when I saw a lot of weird stuff happening, I started trying to encourage people to, hey, just get one Bitcoin per child. That was the thing. Get one. If you have 2 kids, 2 Bitcoin. It'll cost you $6,000, whatever. Lock it away. Come back in 2030. It'll pay for their education, all that sort of stuff. So I started trying to orange pill my friends on my network. And that's why I made a video that went viral. And that's how I started doing YouTube videos. I was retired and bored, and that's the history. So next question is, what do you guys think about the impact of FedNow crypto? Are you guys familiar with FedNow? It's the foray of the US government to get into blockchain. I'll take a quick stab first as well. I do think it has it's a double-edged sword. One, it might legitimize cryptocurrencies, enhancing accessibility for the mainstream, also institutions to adopt it, because it does enable 24/7 fund transfers through banks, whereas today they can't do that. It also has lower transaction fees. And this is all good for crypto and crypto adoption, but it could threaten crypto if banks create their own digital currencies, reducing demand for Bitcoin and Ethereum. FedNow could aid regulators as well in tracking crypto transactions, et cetera, et cetera. So I think net it's positive, but what do you guys think? Like FedNow, a lot of people call it CBDC light as well. It's the first stepping stone into central bank digital currencies for the US.
I mean, in my head, it's not at all the same. It's not sovereign. I mean, it is state money. It's not digital money that is on the internet. It's connected to the government. It's not global. It is 24/7 though. I don't know if it's open. To me, one of the biggest questions is, can devs build on it? If I'm a dev, I'm a 12-year-old guy in India who just learned how to program. Can I launch something there? Can I accept payments? Because in ETH you can. And in 2020, I introduced a guy on my channel. He was like 15 from India. He had already a DeFi protocol. He had 300K in his DeFi protocol. I don't know if that DeFi protocol still exists, but I mean, that's innovation. And anything that is like state, $300K exactly. Wow. But it was in the bull market. He had $300K because he had a Twitter and he was tweeting and he was a dev, and it was crazy. Yeah, it's possible in the bull market. You can be 15-year-old, you have 300K in your DeFi protocol with some lending. I don't know what he did, but that's innovation. That's a financial platform with open innovation. Anything less that is not global by a government, yes, 24/7. I mean, finally, we've had 24/7 internet already for 20 years. So in my head, anyway, it's totally different, and it's not crypto even.
Interesting. CTO, any thoughts on that? FedNow.
I haven't studied enough, so I'm not so sure, actually. I just look at the website now, connect with your relationship manager to get your questions answered. I think that one thing that crypto has going for itself, it's not the decentralized aspect, it's the permissionless aspect. Like Ivan said, anyone on the planet can go and get access to the tools and start programming immediately. I'm sure if that 15-year-old Indian genius, if he writes here to this relationship managers of FedNow, he's not going to get access. He's not going to get started. So permissionless is a huge thing because it promotes innovation. It's been key for the success of internet, that basically anyone could go on the internet and connect and get access and start innovating. And that, I don't think this, without really knowing, I don't think this service has that from the looks of it, but I'm not sure. I haven't looked at it.
Good. Final question.
By the way,
yes,
I'll link this. I'm gonna link this intro in the YouTube channel, guys. You can watch it. It's Indian guy. He's 13 at the time.
That's amazing, and that's so impressive. I love when I see super young people either adopting technology and getting ahead real fast. It warms my heart. This is the final question from Craw F1. I wonder, will Matic make app chains for Solana? So my take on this is real simple. Solana's layer 1. It already has speed. It doesn't need scalability like ETH does with Polygon. I do believe there's much more option around interoperability between the two chains. But over to you guys. CTO, what do you think? Will Matic ever make app chains on Solana?
Don't know. I haven't heard anything. I mean, Ivan, you're more the Matic expert. I haven't heard them talk about that.
Yeah. Matic, they don't use Solana in their SDK now. But if it is the case that SVM, which is Solana Virtual Machine, gets more adoption as a standalone chain. So what we're seeing with MakerDAO, they do a standalone chain using Solana Virtual Machine. Let's say we have many of these projects building. Then it makes sense for either Optimism or Polygon to include SVM as an execution environment, because actually you can use Solana Virtual Machine in this system that they have, where you have an execution layer and then it gets connected to ETH for security. You could do that, and that would boost the whole Solana dev community, because now you're not just building for Solana, you're building for Solana and all of the other chains that use the same tech stack. So right now, probably not. In the future, it's possible.
Beautiful. All right, so that's kind of a wrap, everybody. I want to say a big thank you as well to Moto89, Jeff Hammer, Stephen Weston, and all the crew in the chat, and the moderators, Team D Tesla and K8 and everybody. One thing as well, a quick reminder, if you haven't already, do not forget to subscribe to these gentlemen here. Channel links below. Any final thoughts? I think it's been an interesting show, very broad, talking about adoption in DeFi and TradFi, and everything is converging. I think that's pretty clear.
Yeah, I want to congratulate everyone who is still here, because I'm sure you see the same. It's like a ghost time. Engagement is like all-time low. It's boring. This is harder than when price dumps, because then when price dumps, at least you feel some pain. At least something is happening. Now nothing is happening. You go, what they say, price same as in March. You go away for 6 months, you come back 6 months later, nothing has happened. Exactly, absolutely nothing. And that's when people log out. They stop following crypto, Bitcoin. They forget about it. They get interested in something else instead. And then what's going to happen? Price at some point is going to turn around, and they're going to miss the whole bull run, and they're going to come back and buy when it's maybe the top again. So I think try to stay in the game, everyone who is listening. Don't quit at this point. Try to stay engaged some way, and then you're not going to miss when it turns around.
In fact, there's a beautiful data point behind that. If you look at traditional markets, the S&P 500, 80% of gains happen in 30 days over 10 years. If you're not in the market for those 30 days, you're not going to get 80% of the gains. And crypto moves even faster. So it's even worse than that. It's probably like 20 days over 10 years that really matter. So Ivan, closing thoughts from you?
No, it's just amen from me. Fantastic conclusion from both of you. We hodl, we look into the future, and the future is bright. And even though it may not look like that right now, it's going to change to the upside sooner or later, as we have the best fundamentals in the world. Everything we just discussed with inflation, with having ownership of your money, fundamentals are fantastic. And now it's a question of time when price will get pulled like a magnet to those fundamentals.
Yes. Fiat is going to zero. That is for certain. Well, thank you, everybody. Thank you, gentlemen. Happy Monday. See you all next week on CTO's channel. And thank you to everybody in the conversation here as well. Happy Monday. Bye. And happy holidays to those in the US as well.
Bye-bye.
Thank you. Bye.
Happy holiday.